The webinar will begin shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
Good morning and welcome to the Morning Bell for Yellow Tunnel. I am Keith Harwood. Standard disclosures: options involve substantial risk and are not suitable for all investors. Tradespoon, Yellow Tunnel, and myself, Keith Harwood, are not investment advisors, not registered with the SEC nor FINRA. If you do have questions about your own personal financial situation, please consult with a registered financial advisor. The information in this presentation is for education and information purposes only and should not be considered trade advice. And also please keep in mind that myself or the team at Tradespoon may have a financial interest in the securities presented and the trade ideas, so please keep that in mind as you evaluate trades for your own personal investment and trading portfolios. We had this little dip in the market, but it's not a flight response quite yet. It looks like the market's going to fight a little bit here. The CPI information came out fine. It was pretty much in line. No real major surprises, it appears. The market is a little bit more comfortable today. The unknown has become known. That usually means that the market can lower implied volatility again, start taking away that potential risk of a liquidation type trade, and start going back to the normalcy of what we've seen for this time of year. That said, we do know that seasonally there is a little bit of a drawdown around this time of December in the midst of a bullish Santa Claus rally. So we've got to keep that in mind as we evaluate the markets. Overall, looking on the bullish side still. The probability of success still seems to the upside. It's a little bit higher today than it was yesterday, and thus the market is a little bit higher today than it was yesterday. There are some key elements that seem to be performing decently today to help negate some of the bearish potential. We're seeing semiconductors recovering a bit today. Broadcom up a bit off of some AI news with Apple. We're seeing that semiconductors are not going into that full liquidation moment, at least not yet. I got to keep an eye on that for that potential that it could create a bigger fall in the market. But for the moment, the technicals are lining up okay there. Because the market is pricing in a lower return on capital, that actually allows for a higher potential return on capital from the VIX if we do see an outsized move in one direction or the other. So with options cheaper, we can buy into options at a lower price, get more leverage, and thus have a higher potential for magnitude of return if we get the direction right. So we got to keep that in mind, but the market is balancing that out. And for each individual trader, it's a lot about trying to find that balance of what you're looking for your portfolio. Some people really like to get big wins, those 300-400% kind of winners. That's not going to necessarily have the highest probability of success in most cases. If you're trading for 300 or 400% returns, you're not likely to see 50% winners, 60% winners, 70% winners. And if you are seeing 80-90% winners, you may see a lower return on capital as a result. That it goes back to compounding the investment. High probability can be really good for compounding investment. High return on capital can also be really good for compounding investment. But those opportunities for those big returns don't happen quite as often as those grind out, 10, 15, 20% kind of profits. So a lot of this is about having a understanding of what you're looking for in the market and what you're looking to achieve. There are people as well that like to play those like lottery tickets, 5% win rate, but 10x the money, 100x the money. Though if you can get like 100x the money, those work. 10x the money actually has a low expected value, right? If you only have 5% probability of winning, 95% of the time you're losing 100%. You're actually expecting to lose money. So keep that in mind when you're evaluating these lottery ticket kind of theories. You have to have a huge potential return in order for them to work. But if you can find opportunities that balance out the psychology, the psychological aspects of winning at the right rate and winning at the right magnitude, that's going to help your trading. It's actually also part of why we go into some of these systematic trading theories. You go into artificial intelligence-based signals or systems-based signals that don't allow for the emotion of trading. It helps improve the compounding investment element of it, because it's all looking for the best expected return over time on a whole portfolio, as opposed to over an individual trade that looks particularly attractive but has big risk. So as I said, we're just looking at balancing risk reward profiles and expected values constantly, of course. When looking at these markets, 2 to 3 days to confirm the trend change. So semiconductors bouncing back today, that doesn't mean they're bullish yet. They may bounce back, and if that can start to get a little bit more momentum to it and start seeing people investing in stocks like Nvidia and helping AMD recover from what looks like just an awful chart, then maybe we've got to change back into buying some of that momentum-based semiconductor names, AI-based names. But when we're seeing the flow going into safe havens, then that's, a different story, of course. With the VIX dropping again, it does allow for more time, pushing the expiration month forward at a lower cost. And that's a nice thing with the market drifting higher. We're getting the VIX back down a little bit today. And then finally, we look at those chase trades, those revenge trades. When you get big falls, big rises, it can be very tempting to try to fade the move to trade contrarian, the already moving elevator up. For me, that's not my trading style. I don't like to jump into the elevator up. I like to look for reasonable continuation on the trade, because those ones that have the elevator type moves, those have big potential whipsaw volatility. So unless the implied volatility, the options are cheap, which they rarely get to at that point, I don't see the best opportunities. But that doesn't mean it can't work for you. So if you're looking at a stock that's got that kind of setup, a lot of momentum, we can definitely evaluate that today. And on that note, if you do have questions about specific stocks or setups, please throw them in the question box and we can address them as we go through everything. And again, good morning, everybody. Yeah, good morning, Fred. We've got a good sized group here today. I'm really excited to chat with you guys. Before I get started actually on this, I'll give a little reminder. We do have a webinar, Vlad and I, here in just a few hours at 1 o'clock Eastern. We're going to be talking about a new AI-based system and a little bit more about utilizing options and AI and how that can help you and help others and help everybody trade smarter in their portfolio. If you go to optionhotline.com and then click on webinars, you can see the link down here. You should also have emails in your inbox that would give you the registration link. Even if you can't attend, I do recommend signing up. I believe you get a replay on this one, of course, and that'll give you an opportunity to evaluate some of the stuff that we're going to be talking about here with our hosts from FFR. All right. Before I go to charts, I want to review this seasonal chart stuff. Since you guys pointed this out to me yesterday, I hadn't even looked at this yet on the Tradespoon website. Seasonally, SPY does tend to have a bit of a drawdown up until, basically the end of this week before recovering and completing that Santa Claus rally. So I want to keep that in mind. The average over the last few years has had a rally that we have been following pretty significantly well here, followed by a little pullback and then a nice recovery. So this is all since 1993, it appears. Over the next 20 days, the probability of up is there, but over the next 30 days, the new year, we do tend to see lower predicted prices. So while there is a good, I think, justified reason for looking for end of year rally in the next few days and getting some, short-term gains off of that, I want to be aware of that concern that into the new year, we may see a little bit of a pullback. Part of what drives that is taxes. People don't like to take capital gains at the end of the year, because then they got to pay the tax bill on it. But if I take that capital gains at the beginning of the year, my tax bill is due a year later. So we got to keep that in mind as we evaluate all of this stuff. The mid to short term, the very short term can be bullish coming up here in the next week or two. But after that, it may be a good time to start to lighten up positions into the end of the year and start reevaluating for new opportunities in the new year at a lower price, buying the dip kind of opportunities. All right. Let's look at the 10-year yield now that we've got the CPI data. It did basically nothing, right? So we'd had this nice rally up, pushed up to 4.5%. Above that, as we've said many a time, I think that we start to get into concerns about inflation. CPI data is okay. We didn't rally up the 10-year yield to start getting inflation concerns. If we get below 4%, we start getting concerns of recession. We're in the middle. We're in that Goldilocks range where I think the market's just comfortable with where we're at. There's no real major concerns for recession. There's no major concerns for inflation. We would need some sort of fundamental input, I think, to shift that mark. Something with the Fed next week, something in the commentary. It seems unlikely at this point, though. So the market doesn't seem to have a big trigger for that tail risk to the downside yet. To be determined, of course. And we are seeing an interesting move out of Bitcoin this morning. So we're pushing back up towards the highs. We haven't hit 100,000 yet, but we are seeing some risk on behavior in Bitcoin. We know that this, the Trump political stance on crypto is very bullish for crypto in general. The expectation here is that this is going to be a big thematic element for the next 4 years. The market has priced in quite a bit of this. We had a massive rally right after the election. The RSI got up into the 80s. We've now done that consolidation. We tried out the waters, tested the waters above $100,000 for Bitcoin, and then pulled right back. The consolidation period is natural within a bull trend. We didn't have any major and can definitely lead to some opportunities, I think, in some of the Bitcoin names as we see this bounce back and negate any potential for a test of 90,000 or lower. I'm getting more and more confident that Bitcoin related names can have good bullish behavior into the end of the year. All right. So with that, we'll wait about 3 seconds so we can see the actual chart here. And here we go. New day. So we're opening, let's see, yesterday's high was 605.80. So we're opening right at the highs. Today's open is officially 605.77. We're just below then the highs, couple pennies. But at the end of the day, the market is negating yesterday's pullback. What I'm concerned with in SPY and what can create some concern for further downside would be opening here on these highs and closing near yesterday's lows or below yesterday's lows. That would be similar to the pattern we've seen for the last 2 days. Just general selling pressure throughout the trading day. So if that trend, that pattern is done, then the market starts to look for the new high again. If that trend is continuing, then people, I think, are going to start to catch a little bit more onto this concept that people want to reduce some positioning here in the next few days before that end of year rally. So it's just about timing here. Today may be a good day to add. For my personal velocity here on this, I think I want to see how much of this trading day plays out. If we stay up here in the 605.80 range, we're in pretty good shape. If we go back down to unchanged or negative on the day, then I got to wait another day. So as long as we're staying in this range or we get confidence, then my confidence can improve to look for some short-term trading opportunities to the upside. The VIX is pricing in for that continued upside. So we had the bounce back in the VIX after hitting a low of 1270, got up to 54, yesterday, now back down to 13.6%. These are all relatively low numbers when compared to the pre-election level or even the immediate post-election level, but we're not at the ultimate lows that I think we can achieve if the market's truly bullish in the 11, 12 range. Okay, so we've got some downside to the VIX. That means options can get cheaper. That usually will come along with a grinding higher market. So we're not grinding higher aggressively right now the last couple of days. Seasonally, we grind a little bit lower before getting that next leg on the rally. Looking for signals that rally is going to be beginning again into the end of the year because it may only last for a week or two. So if I'm just looking for that week or two return, I got to watch for those signals. And the VIX falling does help. Okay. SPUDEX, comparing the puts to the at the moneys, and I got to go down to 3 months because of the one bad data point, is not coming off quite as aggressively. So what that really tells me is that as people are evaluating this market, it looks like buying of out of the money puts, along with this selling of at the money options. So the VIX down means we're selling premium. The SQDEX not down means they're not hitting the puts, relatively speaking. So likely we're seeing, at least initially today, and this will shift throughout the day, a little bit more of credit put spread sellers rather than outright option sellers. Maybe not selling out of the money calls yet, just looking at ways to define some risk with a interest in buying the dip. And that can go along with that idea that we may dip a little bit, but it's a buyable dip opportunity. All right, what else we got? We'll end with Qs today on the, have been relatively weak over the last couple of weeks. Today, just kind of doing the same thing that the S&P is doing, bouncing, trading near yesterday's high, although we are starting to see IWM down a little bit with SPY continuing to firm. So we may be seeing a little bit of rotation into tech as we look at the IWM chart on the open here. The big thing for me in small caps is still financials. If small caps and financials sign for those, domestic names, the regional names, or sorry, not the regional names, the small cap names, we're just not seeing a ton of aggression into these smaller caps yet. I'd like to see XLF above yesterday's high to help give me a little bit more confidence into IWM. And I'm just not seeing a lot of that yet. When I compare that to QQQ, up 1% today. So with S&Ps up 0.5%, small caps up 0.5%, we've got tech up 1% and closer to the highs than S&Ps or IWM. Looks like we're getting back into momentum risk on tech buying. And it's been happening in spite of SMH relative weakness. So semiconductors are bouncing back today, but only up 1% is not necessarily showing any sort of leadership to tech. We would normally see, as you can see in the implied volatility, that, where are we on Q? There we are, Qs. Qs, 14% implied volatility, SMH, 28% implied volatility. So to move lockstep, we'd be looking for SMH to be up 2% when Qs are up 1%. So yes, they are bouncing back. No, they are not leading tech. We are seeing tech leadership from other subsectors of tech more so than semiconductors. That is the one red flag for tech. I want to see semiconductors take some leadership within the tech market to really show me that tech investment is the name of the game. Otherwise, it still looks like people are rotating maybe somewhat within tech, but generally speaking, out of some of the big winners, the NVIDIAs that have been so positive and so strong for so long, and into other names, whether it's another subsector of tech, such as big tech like Apple, or artificial intelligence, or into the small caps, which they did right after the election started, okay, or right after the election results. So that's kind of the broad view here for tech and the markets. Overall, we're seeing a little bit of signs of bullishness, but I don't like the fact that semiconductors didn't really test yesterday's high. I don't like the fact that they're getting a little bit of selling right after the open. I do like that SPY is holding up okay for the first 5-10 minutes. I want to give it another 10 or 15 to make sure that we don't have major selling into the open. When I look down at the last 5 days, I'll do a 15-minute bar here. It's really after that first hour of the day that we saw selling in SPY on Monday. It took a little later before we really started seeing selling action in SPY. This is part of why I want to look for the end of the day to be my real signal here. This is a big move for the open off of that confidence from CPI. But if we start to see anything like this downward intraday action, that's not going to add much confidence to the bull for now. So we'll have to look to wait if that doesn't follow through and get some nice, white bars on my screen here, the green or the black. I don't want to see a lot of red bars coming into the day as the volume picks up. But overall, it is also a lower volume market right now, being near the holiday season. All right. Should also note that FXI had that big spike on Monday and has completely wiped out, well, not completely, but mostly wiped out that move. So we're not seeing China bullishness here yet either. We had the big run back in late September into early October. We then fell back down off of that elevator up to a couple floors lower and then sat for a while back up. It's a very choppy market right now. If FXI does get bullish, it's normally a good thing for silver, but you can see silver after their spike has also started to lose that momentum. In spite of that, we are seeing bullishness in gold still, and I still don't see this being a bull market for gold. CPI data I thought could have been enough to cause gold to start coming back off. Maybe some of the Bitcoin trade is helping keep gold elevated since people have been using Bitcoin as that inflation hedge and that dollar hedge more so than gold. The dollar firm again today, that's a major concern for me in gold. I've been sitting with a 252, 247 put spread for December 20th expiration, a week from now in GLD. I'll be looking at that for leveraging the trade today, maybe tomorrow, maybe it waits till Friday. But a 252, 247 put spread right now, I think that unless we can get a shift in the dollar and shift in the dollar yen, I'm not sure I see much upside in gold from here. We're really testing this resistance level, the November 7th high, the November 22nd high. This ultimately could be a top type spot where we then drop back down towards 243, 242, or ultimately maybe lower down all the way to the lows of 237. That seems a little bit extreme for me right now. I want to be more conservative and look for 242. So what I'm going to be looking at today is shifting from the December 252, 247 put spread. That's currently trading around $2.50, and look out to January with a may go a little bit lower since there's that potential for getting below $1.25. And in going into that, I'm looking at something that's got more leverage. So instead of having a $2.50 reward for $2.50 of risk, I'm looking at $3.75 reward for $1.25 of risk. We do need to have more downside, but a retest of 242 instead of going in that December put spread from 2.5 to 5, it would put this put spread, the January 245, 240 put spread, over $2.50 because we're closer now to the lower strike. So it has that same 100% plus return on a move down to 242. But even further, if we go down to 240 or 239, and I apologize, the December put spread would start to get closer to $5 on a move to 245 or 244. 242 is where it would really start to get closer and closer to that full $5 value. And with 9 days to expiration, that would be nice, but I think that there can be some more leverage here by getting into GLD Jan put spreads for that same type of move with just a bit more magnitude behind it as we're seeing the shifts in the dollar. All right. Yeah, and as I mentioned, if you guys have certain stocks you're looking at, we'll definitely look. Before we do any other positions, I want to reevaluate this Adobe chart. We were talking a little bit about it yesterday at the close. We've got earnings today after the close. So Adobe is sitting right here at 550 right now. The recent realized volatility on earnings has been between 8 and 14%, 8 and 15%. I do believe that tech could have a decent sized move here on Adobe's earnings. Tech has been somewhat concerning for people. We don't have as much major positioning, but with Adobe trading near these recent highs, clearly people have been accumulating some of Adobe stock. The prior high is 590, so it's about $40 higher. There should be some support around that big number of $500 a share. And that goes hand in hand with that 8 to 10% kind of move. So average 6%, but that was more what we were seeing a year ago. Recently, we've seen a little bit bigger movement. There are a couple of different ways to approach this, in my opinion. The thought we were looking at yesterday was a 250, or sorry, a 500, 495 put credit spread paired with a 590, 595 call credit spread, about $1.10 on 90 cents on the put credit spread. So we'll round it to $1.90, maybe $2 for the double for the iron condor. It's risking 3 to make 2. So it does have a lower reward than the risk, but that would be betting on a more range-bound trade similar to what we saw a year ago. I'm starting to shift my opinion here, maybe towards the double fly. All right, so going back to the sort of the standard double fly, still targeting a move of that magnitude, but now saying that if I get it right down to those strikes, I could look at a 510, 500, 490 put fly. And that right now is about 6.5, 20, so $1.70 credit, about $1 on the put fly, and then 590 on the call side. 600 is a bigger number, so if I want to be symmetrical, I'd go to 590, 600, 610, 1170, so call it $3 credit, about $1.50 to $2 on the call fly. So it's not hugely leveraged doing the double fly, but if I can get that size move right and we go to the big strikes, that can pay off. I'm questioning myself again as I think about the price. I'd like to be able to do the double fly for 2.5 or less. If I can't, I think the iron condor for around $2 makes a little bit more sense. Really, this is a situation where the market's pricing in something similar to that $45 to $50 move. So I'm just trying to figure out a good way to leverage that potential of being in line. And I'm now kind of going back towards the iron condor because then I get a whole range of places to make money between $500 and $600 a share instead of having to hit somewhere between 510 and 490 on the downside or between 590 and 600 on the upside. So I get a bigger range for my profit window if I go with the iron condor than I do with the butterfly, the double fly. And I think given that, I think I'd lean towards the iron condor more so than the double fly in this case. Yeah, Fred, yep. So we came to the same conclusion here. As I see, you said you go for the iron condor on this trade, and I think I'm going to go that route as well for this one. I'll look at that into the middle of the day, just in case we do something weird like that. May shift my opinion on that 590, 600 a little bit, but it shouldn't matter too much. The iron condor is pretty delta neutral, and I think it allowed in $50 of here, and that seems like a reasonable expectation overall. If we do move 10, 14%, I'm really only risking $300 per trade instead of risking $300 per trade for not getting movement. And betting on that bigger movement up to 600 or down to 500. So I think I like the iron condor better the more and more I look at it. I keep trying to convince myself otherwise, and maybe sometimes you got to just stick with what looks like the best R&R on it, instead of trying to over engineer a different trade that it's being priced into the market. We know what the market's pricing, and then we decide if the setup is worthy for the particular setup. Just checking on the earnings from last night and this morning real quick. GameStop moved a little bit less than the expectation. 30 looked like the number based upon the open interest here. So we were looking at 30 or 25 from some of the open interest analysis here. We came up a little bit shy of 30. It was a very tight window for the double fly, currently trading at around 20 cents, 25 cents. So currently a wash, trading at 29. If you did do the double fly here, targeting 30 and 25, there's still decent hope here. GameStop, not as volatile as AI stock, not AI the sector, that has been that grind towards 30 is coming into focus. And honestly, it might not be a bad trade to just take that 29, 30, 31 call fly now for a 48-hour hold, holding it into Friday, letting that 30 magnet start to really play out. Could be an interesting strategy now, knowing that the earnings are behind us. So we don't have that asymmetric tail risk move potential anymore with the fundamental input there. And now it's just about market digestion and where we try to hit the pause button. Is it going to be where we're at 29, 30 with the open interest? Or could we push all the way through and go towards 32, given that that was the previous high? And those are really the two strikes right now the market seems to be focused on the upside. 30 for the bigger, quote unquote, round number with the open interest there. 32 for the prior high. I lean towards 30, and then if we start to push towards 31, it tells me that at least for now that theory is wrong. But I think there's something there. And again, I'll give it another hour or two, and then maybe put on a small butterfly there just to look for doubling or tripling my money. Because if I can get in that butterfly for a quarter, huge risk to bet that GameStop isn't going to spike or fade aggressively here, since the post earnings move has been fairly muted and fairly well contained here. Yeah, and that's a good point, Fred. There's not a ton of crazy volume on Adobe stock, so that also tells me that the market's not as crazy excited about what Adobe's going to come out bullish or bearish. Let's just pull up the volume on the stock chart. There was some increased volume for a few days and then some bearish for 2 days. I don't believe that the market is going to be overly positioned here. Clearly more on the long side, just given the actual price behavior, but the volume behavior isn't enough to really make me think that there's somebody with a huge negative position potential here if earnings come out bearish, pushing this down to 470 or lower, or coming out bullish and pushing us to 650 or something like that. So, yeah, I think I like that better overall. The other one that had earnings this morning that was an interesting look was Macy's. So, expectation around 7.5 to 8. Well, the expectation was about 10%, and we hit it. So the blue line there shows what the market's pricing in. The red line shows how far down we went. There was a missing piece of data here for the implied for May, but on average, we've seen this expectation of around 10%. We've seen it do 11%. We've seen it go 1%. This time the market hit it right on 15. Somebody could make decent money on that. I was looking at that 15.5 line. We overshot it by a little bit. But at the end of the day, this was a hard one to really do anything major because we're such a low dollar, or on the upside to like 18 was a bit too, I think, focused on a $16.5 stock. Trying to trade these double flies can be a little bit difficult when you're getting into lower. More, I think, interesting from a analysis standpoint to see how the market was pricing in, how the move happened. And Macy's looks, JWN on their earnings came down and then slowly bounced for 3 or 4 days before retracing. Macy's, probably just not much to do with it now. We dropped down. The consolidation area looked to be around 15.5. We overshot that a little bit. We didn't push below lows, so we have found support here above 14.5. The market's just going to, I think, be a little bit disinterested in Macy's. Fundamental investor starts to build a position long or short. For me, I don't see anything major in that, but other than to evaluate how right the market was for the earnings move. All right. Let's do the Bitcoin names. So MSTR, MicroStrategy, went up the elevator, came back down. Looks a little bit like what happened in China, right? We went elevator up, back down, consolidate. Now finding some bullish momentum here with Bitcoin rallying. Implied volatility has fallen down to 110%. This is starting to show a potential for one of those lottery ticket type trades for me into the end of the year. So if Bitcoin takes a big rally into the end of the year where people don't want to take profits and have to pay taxes on their Bitcoin profits, maybe these stocks like MSTR can really get exciting. It is still expensive. The $500 calls are still $20. So because it's a 400, it is still a lot of premium. So for a smaller account, it's a trade I'd probably just stay away from. But an opportunity here, knowing that there is high risk to it, but buying into like the $500 calls, these could be a 5-7x winner if we do see a retest of the highs with Bitcoin pushing back above 100,000. For increased accessibility to the Bitcoin trader, we always can go back to MARA, which is still hanging near the lows, but has done a nice job of rallying with Bitcoin, or Riot. These are names that, Riot didn't do very well on earnings, but rallied really strongly with the Bitcoin bullishness. MARA rallied initially and then didn't do well on earnings, and then is recovering off of Bitcoin bullishness. BTDR, really unchanged on earnings, rallied strongly afterwards, so it was a delayed move there. This is a name that I had thought would be a potential for liquidation if Bitcoin falls. Now that it's not falling, this has been maybe one of the better performers overall, very minimal pullbacks. Could be on the interesting side as a result of that. The implied volatility hasn't spiked quite as aggressively. It only got to 150% relative to, and I want to see something here that could be interesting. I think part of this is driven by, in the past, they had a convertible bond that led to a lot of selling of now very far in the money calls. That the market was selling the 7.5 and 10 calls and the 12.5s in Jan. A lot of the 7.5s in March. These are now deep in the money options. They may start getting assigned on those calls and end up long stock as a result. Short stock as a result, and have to unwind their position between the convertible bond and the stock. But if they just convert the bond, then they're out of the position. If they're not comfortable doing that, they'll look to sell other calls against the position. And that could allow for some interesting entry points on the option side, because implied volatility falls when people are selling calls, even if they're doing so because of a separate market input, a separate market dynamic structure. So something to look for. I haven't seen big volume selling calls yet, but if I start to see volume selling calls trying to capitalize on something like that, I can actually leverage that for a short-term upside move if Bitcoin does push back into six figures. What do you got here? Hut. Yeah, so another mining company. Do they have relatively liquid options? They do. Well, some of these spreads are pretty wide. How about on the serial months? Yeah, so like 15 cents wide is a bit wider than I normally like to see, but that doesn't mean I can't get mid-market execution. All's 13 cents wide. I wouldn't go in paying $1.14. I'd go in like at $1.08. So if Bitcoin goes back to 100,000 plus, I would not be surprised to see Hut retest that 32 level, and getting into some December, or again, I think January 3rd is where I would really prefer to be. These Jan 30 calls are fully intrinsic on it, plus the time premium. We'd be looking at a 50 to 100% return, depending upon how high on that. Probably about 100% return off of a rally back to $32. So if we start to see more and more bullishness in Bitcoin, that could be a way to take advantage of that. And you mentioned, Fred, the credit spreads in IBIT. I think that's another interesting way to do this. Bitcoin implied volatility, I get a longer history of it, is sitting in the normal part of the range. I am wondering if Bitcoin implied volatility needs to rise more. If we get above $100,000 a coin, does this start to get more exuberant or in the range? I agree that there could be some good value from those put credit spreads or in the money call debit spreads. That can be a definitely good profit center. And that's the best thing to have when we're just staying range bound. Where it gets more exciting is if we start to push. Then I can start to look for out of the money calls under an expectation of an implied volatility spike. Maybe it's to 70%, 80%, but then as implied volatility is rising, my premium on my options is rising at the same time as the delta, the directional move is working. So I can get, paid for two different reasons. if we can get, again, looking for some out of the money calls. 60 is a 6% rally. So, if we retest the highs, these 60s are kind of right at the money at that point. But you can see like the at the money options are currently trading around 370. If that implied volatility rises, those could be $4.50 or $5 on a rally to $60. So it's another way to potentially double my money or more if Bitcoin is going to retest the highs. MSTR looks like it has some of the best leverage out there, but it is the highest price way to do so because of the price of the options and the price of the stock. You see Riot here. So Riot's previous high pushed all the way to 16. Riot may be another, as I go back to it, Riot may be one of the better leverage sources if like truly fully bullish on Bitcoin. The earnings have been fully digested. That initial move post-election has been fully digested. Seems like 14 would be some initial real resistance, some in the 12.5 range, but 14 maybe more likely. And like these $13 or $14 calls could be a decent source of leveraged return, along with roughly just under a coin flip of whether these $13 calls would finish under the money, in the money, excuse me. The $14 calls, about a 1 in 3 chance of finishing in the money. If we start to get a bigger move, and 7% is nothing to sneeze at, but that's right in line with the normal expected sort of random walk behavior. So technically speaking, I think these something in the $13 to $14 call range for January 3rd could be interesting there, with the reasonable implied volatility. And Mara, same sort of idea, looking for prices maybe back up to 30, can allow for some $27, $28 calls, something in that 40 delta range. Fully, we'll call it like fully vested. The $28 calls when we're trading 30 are worth $2 at expiration, but with actual extra premium for time till expiration, these could be closer to 4 or 5, maybe in the near future. All right. I think that's enough on the Bitcoin stuff for now. If you guys have other Bitcoin names you want to look at, let me know. Oh, Core Scientific. Yeah, Bitcoin mining. And so they didn't have quite the same spike, but they did have a nice move off of earnings and had more of a trending higher move, so a little less wild in their behavior. Resistance around 18 here. So it's been a more muted move overall. I'm not sure what's going to get the market to say that Cores is more exciting. CORZ, Core Scientific, is more exciting than the MSTRs, the Riots, the Maras, but this could be a safer avenue. And maybe it could just justify then a call spread, even though the implied volatility is a little bit lower, since we haven't had that spiky type behavior. Like a 7 max value is $2, trading at about 20 to 25% of the max value. It certainly allows for some leverage without having to get that same sort of spike that is tempting to trade for in the other names. A move back to the previous highs, plus a move through and starting to get more spiky behaviors. All right. Let's look a little bit at the AI names. So I mentioned before, AI has been all over the place. I'm going to let this thing continue to digest the earnings. We touched 50 in the after hours on Monday post earnings. We touched 35 yesterday. We're just chopping in this range, moving $3, $4. It's very volatile without any real direction as the market is trying to decide, do we buy it? Do we sell it? What do we do? I want to wait to get clarity from the market before I get particularly involved in that. UiPath seems to be following a little bit. When AI is weak, Path gets weak too. So this could be something where if AI starts to get more bullish flow, pushes back towards 45, Path could follow with it and actually generate another leverage thing. I think AI looks like a better company overall and a better stock overall. It's just this is something I can look at if I miss the move in AI. And then, of course, PLTR. everybody's favorite AI name. It is still consolidating and pulling back a bit here. A wild day on Monday with the massive rally followed by the pullback. Then a little bit more profit taking yesterday and today. Once we start seeing a bull flag set up in PLTR, that can become a longer term trending type trade again for me. But as it currently stands, we're getting a little bit too much chop to justify buying it. And I'm not going to go bearish on PLTR. As much as I had thought before that maybe this move was overdone, all we did was consolidate slightly and continue to grind higher. When you got these thematic investment theories from people, I don't see people, long-term holders, looking to any of the election is making a ton of money still at 65. They're not getting out because of risk reasons. The only people that would have to get out aggressively are those that bought in this like 5-day window here. And that's not enough volume to say that somebody is way off sides on this, taking major losses, needing to push this down. What would potentially change that would be if somebody said the value is just too high. I was in from 42 and I want to take my profits. But again, I think that is more likely to occur in January, new tax year, than into the end of this year. So I think for PLTR, we're looking for bull flag setups. It's not there today yet. The open was firm. We're still seeing some risk off behavior. I'm looking for that next buyer that's going to help us push up. And right now, he's not there today. Maybe he'll be here tomorrow. Maybe it'll be the next day. Just kind of chopping here. I'm starting to think that some of these semiconductors are just going to get boring for a little longer after the pullback that we've had. What's the input that's going to get people excited about semiconductors again? It just doesn't seem to be there. I mean, AVGO, in what we saw in like Alphabet, Google yesterday, off of some AI related, today off of its partnership with Apple on an AI chip, Google on the quantum chip, Alphabet on the quantum chip. Alphabet continuing firm here. Wow, I didn't expect it to necessarily continue to spike quite that aggressively after yesterday's move, but we opened around unchanged and just kept going. Definitely one to watch in Alphabet. If this just hangs here, then we start looking at, I think, in the money call spreads as a way to leverage this with the implied volatility spike. And in fact, I mean, we could probably, for the next couple of weeks, staying above 187.5. Like an 82.5, 182.5, 187.5 call spread. I could see that dropping down towards 70 pretty quickly if we just start hanging out. If we keep going higher, it could drop down to 70 pretty quick. Over the course of 2 weeks, it's risking 4.25 to make 75 cents. So again, buying the call spread would be about 4.25, looking for 10 to 15% in the next 2 weeks. And just on the idea that there's not a high likelihood that we just liquidate Alphabet here, barring some new fundamental input that comes out bearish. But I think that the excitement over what they've just done with this quantum chip is clearly there, and the market doesn't want to see it push lower unless somebody comes out. And it's unlikely in Alphabet that they would come out and say, oh, never mind, that chip doesn't work as the way we had expected. So the excitement's certainly there. And in the money debit call spread or a credit put spread for 2-ish weeks, it seems like a relatively safe way to have a high probability of success, 15-ish% return on capital kind of trade. Let's see how WMB is looking. So I added this yesterday and I touched on it at the close. I actually added it a couple minutes into the closing bell yesterday. So, I mentioned that AI webinar this afternoon based upon what we were looking at through some of the signal was on the list for yesterday. I added it myself. It was showing bullishness. At the end of the day, it actually started to look a little bit more nasty than I was looking for. We were trading within the range from yesterday or from Monday, but we got a little push down at the close. Today, getting a bounce back here, showing a little bit of sign of bullishness. We've had Monday sell-offs, followed by rest of the week little bounce backs. So even from the 25th, that was the Monday sell-off. Little bounce back for 3 days, Monday sell-off. decent bounce back into the end of the week last week. Monday sell-off. If that liquidation, that risk off, that profit taking, whatever it is here that's been hitting the market on Mondays is coming to an end, we could start to see Friday's behavior push up a little further if we don't see an expectation of a Monday sell-off, people getting ready for that next level of selling, that next tranche of selling. We've done it for 3 weeks. That may be enough. Though right now that if we continue this pattern, I've got a little bit of upside for the week. I'm not necessarily looking for 100% return on these January 55s, but I got in at $1.50. If I can get them to like 2.5 on a 72-hour hold, that's a pretty good trade. Obviously, if I can get 65% in 3 days, I'm going to be pretty happy with that trade. We do have the dividend on Friday that's going to drop the stock price by 50 cents. So that's, going to weigh on it a little bit, but that's priced into the options. That's why the calls get down to $1.65 right now. And the puts are also $1.65 because really we're actually trading, 54.80 right now, not 55.30. I can talk a little bit about the Bollinger Bands. So I do, I have the Bollinger Bands on all my charts. I do look at them. I think of them as indications of when we are in an overbought or oversold condition. So for example, with WMB, we were playing with the upper Bollinger and we just rode along between the 10-day moving average and the Bollinger Band for quite a while there. We retested this lower Bollinger Band. Bollinger Bands are telling us when we're a number of 2 standard deviations away from the 20-day moving average. So it can give us a short-term oversold condition, much like the RSI being above 70 gives us a overbought condition, or below 30 gives us an oversold condition. We often see that when we get above the Bollinger Band, it means that the price has gone too quickly, not necessarily too far, it's just too fast. So it can predict some consolidation and limited upside in the short term, or slower upside in the short term. We did it here. We had a little pullback before resuming. We tested the lower Bollinger Band here. It's hard for the market to just ride above or below the Bollinger Band for a long period of time. So it's not necessarily that the stock is bearish when we're above the Bollinger Band. It's just that the bullishness may have gotten ahead of the timing. And so using like an in the money debit spread, like a buying, back here, buying a 47.5 call spread may have been a safer maneuver in preparation for some consolidation. And if we continue higher, it still appreciates, or if we consolidate, it appreciates. So it's the same idea as what you're looking at with the IBIT put credit spread. The idea being, I'm looking to get some price appreciation, whether we go up or sit, not betting on down. And if we do go down, I generally think these are stocks that have a high probability of getting a buy the dip setup. So we should have limited downside. This was starting to show signs that maybe there's limited upside, but that's okay for a 3-day hold with an outright call. An alternative here could have been to say I could also look at selling a 58-59 call spread, even though I'm taking the bullish sign. If I wanted to get more complex with the trade, I could look at buying an in the money call spread, or buying a call and selling it out of the money call spread to reduce the expense, or even just buying a simple call vertical, trading for 56, 57 for the bounce back. But during that bullish time where it was clear that the market was bullish, it's more just about saying, if the upside is going to be limited and I'm not bearish, I just want to use an in the money debit spread or a put credit spread. And in a time like this, from October 18th through November 4th, those would have worked perfectly, just accumulating that extra premium that's there for time. Yeah. So it's just about looking for timing on the market for short term, I guess is what I'm getting at. And it doesn't apply to every stock, unfortunately. So like MSTR, when we're going up the elevator, these Bollinger Bands mean almost nothing at that point. So when you get into those wild meme stock style, elevator up, less liquid, and we're just going, then the Bollinger Band doesn't necessarily give me as much of an indication. But, during this period, if I had used an in-the-money call debit spread, I would have still had some appreciation of my trade through this without having the drawdown on the trade that would have occurred on November 21st. So I wouldn't be getting multiples of my money the way that you can with an out of the money call, but I would be getting at least some appreciation. And for me, when the market's a little less clear and I am still interested and intrigued by a trade, best return for the best case scenario. So as long as the expected value is high, I think you can still leverage stuff that way. And actually looking here, Qs and semis are starting to get a little bit more money flow here. So Qs just made a new high here. Semiconductors up 2% now. So getting a little bit more ahead of tech. So remember, we were up 1% in both. For the last 0.5% in tech, we've had a full percent in semiconductors. Maybe we are starting to shift that a little bit. So this is certainly where we like to watch some of this opening order flow. So the initial bounce back that was lagging in semis, seems like they are starting to get a little bit more interest here. That's a good sign for the tech investor and the momentum investor. IWM's just hanging still. SPY just kind of hanging still. I mean, still bullish, but it's tech that is starting to take leadership again. Maybe some of this Apple, Alphabet, Broadcom announcement stuff is helping drive the market. This would be normally, by the way, a little bit of a concern for tech. Apple's a good company. Obviously, they're generally a safe company, but we also know that they're a large portion of QQQ. And usually I find that when Apple is the big straight line performer up, it means that the market's not really sure what to buy in tech, so they're just going to big tech. I'd like to see more. It's almost a sign of lack of market breadth when Apple is performing. But with had this been occurring with Qs up small, it would be a bigger cause for concern because it meant that people were getting out of some of the riskier tech and just putting it into big tech. So right now, tech seems to be back in control. We're getting some risk on. I mean, Bitcoin up, tech up, semiconductors coming back up. Let's see, is PLTR recovering now? Let's see. So if PLTR gets back up here above 70, I think that would be that final domino maybe to say that tech is okay. Tech maybe even good. But for now, it looks pretty strong. How's Wayfair doing for me today? So I'm still on the 45.55 call spread for January here. I'm expecting some consolidation in this 55 range, so I'm just going to let that sit. There's no signs of real major pullback by any means. Where we rode that upper Bollinger Band, we should have a pause for a little bit. I got into that 45.55 call spread. Well, initially on this jump that didn't end up coming through, but that's why we used a little extra time, because then after the fall, we had a resurgence. And then now after this move in mid-November, it seems to be coming to fruition. I just have to watch that now for a potential for pullback, but I've got the 45.55 call spread. I was looking to get out as it appreciates over $8. Currently, it's trading around $7, just under. It's probably $6.90 right now, $6.80, something in that range. So if we go up, it'll appreciate a little bit faster because the net delta is about 30%. So for me to get $1.20, call it, of premium improvement, I need about a $4 rally or passage of time. If we sit here for 2 weeks, the January equivalent, third equivalent call spread, it's a pretty wide market, but these are probably pretty okay mid-market, 25 cents. These are about $3, so 275. So that would put it at about 7.25. So I'm getting a little bit of theta, not a ton. Most of that theta kicks in the last 2 weeks of the contract. Flat to up still works for me in Wayfair. And I can sit with this for now. And if we start to show signs of a topping action and setting up a further liquidation down below 52.5. I'll just take the money at that point. But for now, I don't mind just leaving it and letting it appreciate every day from data collection, and add more if we continue to the upside. Let's go back to a couple of my banks as well. BK, nothing major there. Mentioned I had added capital at the end of last week. It was on Friday, so that's down a little bit here as we've retested some of these lows. We're just not getting major money flow into financials since the focus seems to be tech right now again. Some of these earlier momentum financials, the JP Morgans, the Wells Fargos, just kind of hanging out and towing that downside to the point where maybe financials get a little bit more pressure here. If people feel like they're missing out by just being long financials instead of being long tech. So I'll have to watch that for rotation again. Support, it just means that people had money to allocate towards tech. Still being flexible here, but I like the financials. But if my options are expiring and my options in like BK expire next week, I only have so much time for them to get momentum again. And right now they don't have that end of this week on whether I want to risk that for the short-term move or just take that off and then reevaluate financials when the money flow seems to be there again. Double check any other big movers for today. UNH. Got to look at it. Yeah, so down to new lows here. Yeah, I don't like betting bearish on it after everything that's going on or bullish or anything. I think I just like staying away from it from a psychological perspective. Alphabet, Broadcom, Lyft. Okay. So we had some news about New York City rideshare rules that's hitting Lyft. Uber getting hit as well, I assume. Yeah. Wow. I mean, Uber's just been nastily bearish, but below the Bollinger Band. So I don't know that I want to bet on a big capitulation selling here as much as with like selling it out of the money call spread or buying it in the money put spread. That way, if we do bounce and set up a bear flag, I don't take too big of a loss. But if we do start to continue to fall or stay sideways, I can still profit. So like in this case, December 27th, it's kind of, what's our bounce back? Maybe 67.5. Is there enough premium to do something there? That is not enough premium here for December 27th. I don't think Lyft is going to have enough premium either. So, if we flip the news on it, it could be a spike candidate. So I think that's probably it's setting up to say there's just not much here right now. Real premium for selling a call spread. The market seems to be trading that same idea. So it's not exciting enough to be a good real use of capital. I do like what Riot's doing though. So I think that's sort of the my thought process here for now is looking at whether financials can start to catch back up, whether semiconductors can continue to play catch up off of this tech move. There's new highs would be over 280. So we got a long ways to go for me to get major confidence in semis. But if they start to move up with tech, then that can be a good leading indicator for tech, but also a catch up trade for semis, at least to 262.5 and probably further if it's going that we're seeing today at the least. All right. If there's any other last ideas, please let me know. I'll scan around for a few more just as we get close to 10:30 here. But overall, market's doing what it does. We didn't have a huge follow through on the pullback in SPY, but the bounce back. The norm is for upside into the end of the year. And just I got to be flexible with this because this bull flag may get unwound if the normal seasonal pattern continues where really the buying opportunity is supposed to be on like Monday. you know. I don't know, Anna Maria. I mean, Google certainly could have room to go, but this isn't a stock like MSTR or SMCI. This is a big company. For it to appreciate by 10% in 2 days, that's already a pretty big move. I think that for me, it's more, I'm just going to accept that I didn't get, maybe if I'm looking for something that might have a little bit more spike potential, I might go back to Broadcom instead, since they're working on this AI chip. Maybe that helps give a little bit more hope for the stock that it could work on something pretty exciting. They're going to report this because it's going well, not because it's failing. They don't want to talk about an AI chip that they're working on, only to come back in a couple of weeks and say that they didn't succeed with it. So buying here, if people do want to get excited about what Broadcom's doing, I think I'd rather go that route for news-based tech than Google, that's already had such a move. So I just think Google could be a coin flip where the downside's likely limited, but I don't know how much upside is there. So if $6 in the stock is too much risk in Google, that's defined by each trader. If I think that $6 is too much risk for me, 3% on this particular name, I'd probably be better off allocating my capital elsewhere. Ooh, silver's popping back up here without the dollar fading. It's interesting. All right, well, that gets more and more intrigue for me on the gold bearish side here. We're getting a little bit more of a pop, fully retesting this high. Once I see this buying slow down, this could be that much more exciting for me here. So we had some good volume on the open for the buyers here. If that volume starts to fall off, we may start to drift back down, kind of behave similar to what we did on Monday. That was a lot of volume for GLD here on the open. So somebody's clearly getting some new positioning here in gold. I just don't know that I buy into it with what we're seeing in the dollar, the 10-year yield, everything else. So I got to lean. I got to follow my signals with the dollar bullishness and lean bearish in gold, with maybe Bitcoin being part of the reason that it's getting bought a little bit, as people often talk about how if Bitcoin's bullish, why isn't gold bullish? That's the best answer I can give you, right? But yeah, I think that to answer your question on Google, and in the money debit call spread, betting on us not going lower, but I'm not sure how much higher we go as the market continues to digest. Usually takes 2 or 3 days, so short-term trade at the very least if looking to trade the momentum, like 24-hour trade. All right, folks, that is it for you here at 1 o'clock Eastern. If not, Vlad will be on for the close today, and I'll be on for the close on Thursday. So happy trading. Best of luck today, and just keep an eye on how that money flow is going. But right now, it looks like tech investing is the theme of the day. So we'll see how it goes. Have a good one, everybody.